It is my pleasure to announce my colleague Izabela Morriss, who is heading our partners team here at CR2, who is going to talk to us more about the importance of the ecosystem. Thanks. Welcome, Izabela.
Hello, everyone. Thank you, Anna. Thank you, Cormac. I hope you can see me after Cormac. I know I don't have quite the same presence on stage. So first of all, thank you so much, everyone, for attending. Thank you to our partners. Thank you to our customers. Personally, for me, it has been a great pleasure to reconnect with many of you in person and also meet many of you for the first time. As Anna mentioned, I'm Izabela, and I head up partnerships here at CR2, and I joined the family about a year ago. Actually, my first day was on a conference in this same hotel, almost to the day. And I think what I'm going to talk to you about today, and I thought about this a lot over the last 2 days in particular, and we heard a lot. We heard APIs, AIs, ML, NFTs, HCEs. We had a new universe even, so it's a lot of complexity. So we know that the banking industry has changed. We know that the payment industry has changed. The way we know banking as it was in the past is not coming back. So I'm not going to talk to you about that, because I think we're all aligned. I will talk to you about what challenges or opportunities could this present, and how we at CR2 will solve for these. Okay, so this guy there inside the bank reminded me of Augustine's presentation earlier today about Fatima. Today, adoption of fintechs has increased dramatically. This number was 15% 5 years ago, 64, probably higher now. When all customers are used to using services from third parties, and that usage has increased. 46% of us, customers today, use services from fintechs, at least 3 services from fintechs every single day. That's, your bank's customer. We also know that the expectations have changed. They have very high expectations. They're used to managing their money digitally. They're used to buying their grocery online on the mobile app. At the same time, regulation has changed. Regulators are widening the scope. However, banks are still very tightly regulated, and that can hinder innovation. We've heard throughout this last day and a half about fintech banking companies obtaining full banking licenses. You heard my colleague talk about Revolut, N26, Solaris Bank, Adyen, huge payments aggregator, acquirer from Amsterdam, and there will be more. And then the customer at the same time has used to embedded financial services. Starbucks, they pay within their app. Today, Uber, paid within the app. So what that has left is shift to a business banking payments platforms, to a platform model together with embedded financing, where third-party services connect to banks' well-regulated and well-established infrastructure to provide a frictionless and seamless customer experience. And I think we all agree that's the end aim here. I recall when I started my career in payments, that was with MasterCard here in the Middle East. And a hot topic of our conversations, many of our meetings, was achieving card on top of wallet. Whilst this today is still somewhat relevant, what now we're aiming to achieve is the app on top of the device. The so-called super apps. I mean, I can't be scrolling 20 pages on my watch or on my phone looking for the app. I put the one I use the most at the front. So this is very important as we build solutions, increasing channel adoption, digitization. How do you do this across channels? And with that, there's some complexity that we have to get through, right? And I believe this will going to get more complex. Probably if I speak to you in a year, this will have probably more verticals. We have remittances, receiving, sending. We have alternative financing, buy now, pay later, the Klarnas, Spoties, Tabbies, you name it. Insurance tech, very big. My colleague made mention about this. Uber offering to the drivers within the app. Blockchain, Bitcoin. I don't think I want to talk about this now, but it's there. So I'm hoping that by the end of this presentation, which won't last long, I know lunch is coming, that I can demonstrate to you how CR2 help you navigate through this complexity. What are the challenges, opportunities? Well, 71% of today's customer interacts with their bank multi-channel. 25% prefer 100% pure digital banking experience with a remote human assistance whenever required. At the same time, as per Ernst Young, the study from earlier this year, they're saying that digitization is here to stay. I think we all agree with that. But it's going to become more structured. We will hear less about ATM and cash and more about tokenization and contactless payments. Okay, so how is our current infrastructure able to support this? How can we digitize our branch offering? If we manage to digitize that, existing infrastructure, we should be able to reduce our cost-to-income ratio. Now, return on equity for the challenger banks is twice as high as traditional banks. Now, a number of reasons for that. I think one of the key reasons is legacy infrastructure. They don't have it. They don't have to manage it. Okay? So with that, we also know that our cost-to-income ratio is also higher. So bring more services, extend digital. And by this, I don't mean, just take a service and put it online. No, we need to adopt the digital-first approach, truly. What percentage of our customer acquisition today is 100% digital? I tried a bank a couple of years ago here. I tried to open an account. I said, we're the first digital bank. We're digital bank, great. So I tried to upload my KYC, NFC, didn't work, didn't recognize, okay. Maybe the app needs a break, try again in an hour, didn't recognize my ID. So as part of this, they had to send a guy to validate my ID. That is not digital onboarding, right? So if we speed up and remove the friction, we should be able to acquire more customers digitally, as and when they want to open an account. Data. Now, we spoke a lot about data, I think, over the last day and a half. And I think we as an industry generate huge amounts of data, more data than any other industry. And this year, the data industry generates is set to grow by 700%. So how do we harness that data? How can we then improve our messaging to customers so they stay with us and increase the stickiness with our customers by driving the right services at the right time, again, to generate frictionless and seamless customer experience? AI, perfect example of that. So if you embrace AI, you also reduce fraud, because you know this customer is not likely to spend that amount of money on that particular day or time or in that country or city. Very, very important. And if you then offer the right customers the right products at the right time, then they will stay in our banking ecosystem. They'll stay within your bank. They have no reason to use services elsewhere. And at the same time, we have a new customer. Okay? They are the youngs, the Generation Z, 18 to 24s, that are digitally native. So they expect services fitting around their lifestyle right where they are, on their phones. And they have this set that are worth about, there's different numbers out there, but according to McKinsey study, last year they said they're worth $44 billion. McKinsey also says that if you combine the Generation Z and the millennials and combine their net worth once they inherit their parental wealth, they could be worth $60 trillion because it's a long runway. These guys are like, in their early 20s. So how are we attracting these new customers? Why they should be with us? And don't get me wrong, we all know banks can't do this alone. They can absolutely do this alone, but there is inheriting risks with it. And of course, you have to prioritize. You have to dedicate talent to work with the third-party services. There's legal, procurement, and all those processes. In a time for a bank to bring a new service, to analyze it, to find the funding and the talent to work, they could have launched this much quicker by partnering with a third-party service. Now, at the same time, the third parties, the fintechs, they do one thing. They do it very well, okay? For them, they want access to your customer base. The banks have the customers. And the banks have the trust of the customer. So fintechs partnering a bank is a big deal because they don't have the investment pools a bank has. So for them, this is an opportunity to develop their product and co-create. I think Augustine spoke about co-creation. Daniel spoke about co-creation. So you both develop a product. Also, the benefit for a bank is that by licensing a technology, then if they don't like the path forward, they can stop, they can change. It's not the tech. Say, no, I don't want this to go left, I want this to go right. No issues. If you do it fast, keep the bank, you keep the customers in your ecosystem, and you generate revenue, you make an impact. Of course, reduce procurement overload, again, contributes to making that financial impact and an impact to your customer. Now, we spoke a lot about Netflix and Apple, the big techs. And the big techs are increasingly putting a lot of pressure to traditional banks. And the reason for that is, first, they've gained quite a lot of share in the payment space. We talk about embedded finance. Okay. 2, they're also tapping banking sectors that are usually untapped by the banks. Wealth management. And 3, they have an unprecedented visibility to their customers' behavior and where the gaps are, so they can tailor the messages. I mean, I would dread to think what Apple knows about me. I'll give you an example. Apple launched in the US a credit card last year. The credit card charges 1 to 3% APR. It's all this small print that nobody reads. But it's aimed for people with low credit scoring or poor credit scoring. Now, as banks, you're like, well, who offers a loan or a credit card to someone with a poor credit score? It's high risk. But what they did was, the card is issued by a partner bank. They gave an opportunity for their customers to build a credit score, to work towards buying more products from Apple. Whilst they buy more products, they build their credit score, they get 1 to 3% cash back into the Apple ecosystem. So what they've done is they've deepened their relationship with the customer, and they build that trust, and therefore they know now what to sell to that customer at what time. They have even built a PFM tool in the wallet so that people can say, oh yeah, I want this MacBook Pro next year. So increase, spend. So very, very smart. And I think fintechs have been very smart as well as positioning these new products and new services to the digitally savvy and the digitally native, the Generation Zs of today. Okay. We understand. And by we, I mean CR2. And the reason we understand is because we work in the same industry and we have the same pressure. We are at CR2 under pressure to deliver an innovative product, an innovative offering to you, to our customers, timely, cost-effectively, and ability to scale that offering. Cormac spoke to you about the scalability, how important it is to have a platform that can scale. Because you can't have 10 fintechs operating in silos. That definitely will not generate frictionless and seamless customer experience. And this is not easy. How do we connect? How do we do this? Well, that same platform that Cormac mentioned earlier, it's able to offer a pre-integrated and pre-built ecosystem of curated partners to enable you to increase your revenue by creating a seamless and frictionless customer experience. It's the orchestration layer, whereby through powerful APIs, we connect with those curated partners so that you don't have to. We go through a tremendous selection process and tremendous scrutiny. Entrust are here. I'm sure they can tell you about that. Of selecting the right partner for our customers. Because it's not just about product. It's not just about the price. It's not just about how they'll integrate, because we have to integrate, not just for one bank, for all our banks. It's about the agility they can offer, because one does not fit all. What Dashen Bank in Ethiopia may require would be very different to Absa in South Africa, for example. We spend the time to curate these partners to save your time. We mitigate the risk. We take that risk. What we'll invest, we'll build those APIs, and we'll expose them for you to connect so you can provide that frictionless service to your customers. I have learned a lot over the last day and a half. So imagine an ecosystem of partners and the pool of learning that creates. It's huge. It's priceless. Because you say, oh, yes, I want to do tap and pay. I want to do, with that way. I want my wallet like that. We'll say, no, we've done it. It didn't work because of this. You should do it like this. And this, of course, saves you on cost. A cost that we take, we build it, and pass it on to our customers. I started my presentation today with two things, really. One was the complexity of that ecosystem. So I hope that has given you comfort of how this complexity is minimized. And two was about, I joined the CR2 family almost a year ago to date. And on day one, when I joined the company, Finton was here. And he sat me down, and I was, oh gosh, this is not a great start. And he said, and we had an investment conversation. He asked me, what is the level of investment that we as a business need to secure in order to take that complex ecosystem of partners, simplify it through our platform, and bring it to our banks? 12 months today in the same hotel, I'm happy, I'm delighted to say that we have achieved that, and we are continuing to deliver on our promise. You've seen many of our partners over today and yesterday. You saw Entrust. You'll meet Tunes. Many of you met them. You will meet, you met Monix. We continue to invest and innovate so that you can create a maximum impact for your customers. Thank you.